Good morning, everyone. My name is Cal Everett. I'm the President and CEO of Liberty Gold Corp. The first few minutes of this slide, we're going to show our technical analysis of the gold industry. I'm not going to go discuss the effects on the gold price here. This is effectively, we're going to get rid of tariffs, wars, Brexits, global debt, and we're only going to talk about the lack of gold and projects in the production side of the gold industry. These stats are taken from multiple Canadian chartered banks, and there's some pretty revealing numbers here. I will make forward-looking statements. Peak gold in August of 2011 was $1,890 an ounce. Even though we're looking at a reversal, it's still down 59% since 2012. And this is partially the effect of ETFs eating up the interest in the equities themselves. Gold production has risen on a year-over-year basis, but it started to decline in 2018. It's declining again this year. The average head grade from 2012 to now of a producing gold mine, and there's only 217 that produce over 75,000 ounces in the world in public companies, is now 1.54 grams. What's happened is the mines have overproduced in order to generate extra free cash flow to get their debt levels down and get their balance sheets in order. That has effectively worked. The average margin for the industry is now $204 US an ounce. Net producer debt down by 57%, but they suffered on the development spending side, and so replacing aging operations, that's still down by 51%, and that's 3% lower than last year. With the higher gold price, they put more money into these mines. Interesting slide. This is the production discovery slides from the 90s to 2018. You can see a pronounced drop as we get out to 2018 of replacement ounces. The average cost to get a replacement ounce in the 90s was $14 an ounce, $33 an ounce up to 2009, and now it's at $185 an ounce, and that is up $11 an ounce from last year. Effectively, we're not replacing the gold that we're taking out of the ground. And these are not all in production because a lot of these are porphyry copper golds. This is the killer slide. So this is taking in all the balance sheet projections from all the top 10 producing gold companies in the world. These are the million ounce plus producers. So if you go look at their production, I haven't got my glasses on here, but Barrick is projected to be up 1%. In 2025, those light blue lines are not in production. That's presuming the mine is permitted and built and paid for and producing in a 5-year period. And you can see things like Kinross down 54%, Newcrest down 38%. And what this is telling me is there may only be one more domino to fall in the majors. And that domino, as far as, because I am a capital markets banker, would logically be Barrick and Newcrest taking out Newmont. And then Newcrest can get all the big porphyry copper golds, and Barrick gets 100% of the Great Basin. That's the only logical move left for the majors. With regards to production, the average in 2012, it was an average of a 15.7-year mine life. It now stands at 11 years. And it takes now up to 11 years to get a mine found and into production. So one hole in the ground, it's empty. You still can't replace it with those ounces. So the production side of the business is wounded. Rising geopolitical risks, we're running out of safe jurisdictions. Now we're looking at parts of Chile going under. The Bolivian prime minister taking exile in Mexico. The questionable jurisdictions are rising, and they're all learning from each other how to expropriate some financial interest or the asset itself from the producers in those jurisdictions. And now we're looking at institutional shareholders pushing their companies to get into the safe jurisdictions and not be a single mine company. Some of the funds that own our stock and the big majors will not buy a single mine company anymore. It's got to be backed up by a second asset. And the bottom point is new as of this year, where there's a rise in anti-open pit mining NGO activity. In some of these countries, no more open pits. They want long-hole bulk tonnage underground mining. Currently, there are 10 seniors, 25 intermediates, and 33 junior producers, all looking to replace their lost ounces. There's simply too many intermediate producers competing for the same deposits. Daily market trading since 2012 for the sector is down by 53%. And the respective numbers from seniors, intermediates, and juniors are shown there, how the volume trading on these stocks has fallen. With regards to global mine statistics, there are 3,900, I think it is 87 mines that produce some gold. Mines that produce greater than 75,000, there's only 217. 81% of those mines are owned by 35 companies, the seniors and the intermediates, and the juniors get the rest. So if you're producing 74,000 ounces, you're not in this statistic, and the location is shown below there. This is where Liberty Gold slides into the picture, and that's how I'm going to work into when I discuss the company. Projects with a published economic study that could produce 75,000 ounces of gold at some gold price stands at 132. Liberty Gold owns 2 of those. One of them is the Halila copper gold porphyry in Turkey, which we're in the sale process with our partner on right now. We're selling that asset on an aggregate basis for 2 holders for $55 million US. The second one is our Gold Strike project in Utah, which has an after-tax IRR at current gold prices of 41.5%. It's got 1.2 million ounces of gold, a 1.8-year payback, and an after-tax NPV of 210 million US. That's where Liberty slides into this picture. And here are our conclusions going into the next year. We think there's going to be a slowing down of M&A activity. Mine divestiture will not, that's happening with several companies. I don't think a lot of those projects are going to sell at all because the majors are not going to get the prices they're dreaming of. And they won't go near historical environmental issues. They're out of there. Focus is on a 10-year mine life. It's all about mine life when I talk to all the producers. And gold to test $1,600 next year only if Elizabeth Warren wins for the Democrats and we have a pro-left versus a pro-right Trump policy battle going on. That'll cause the U.S. market to go down, the U.S. dollar to go up, go down, U.S. market down, dollar down, and gold to go up. And we also don't see any negative interest rates ever for the United States. It's the benchmark currency of the world. We're good. So I will turn the thread when you Now to discuss Liberty Gold. We're fully focused now on exploring sediment-hosted Carlin-style oxide gold system in Utah, Idaho, and Nevada. Again, the standard cautionary notes. We own 3 projects, the Black Pine Project, Gold Strike, and Kinsley in the 3 states. Our respective ownership interests are shown. The same geological team that found the new Black Pine discovery discovered the Long Canyon mine for Newmont that's now controlled by Barrick. That was 2.2 million ounces of gold at 2.09 ounces of 2.09 grams of oxide gold, and that sold for $2.3 billion in 2011. We believe we found another one with the same grade tenure. The company raised $15.8 million recently. And if our Turkish asset closes one of these days, we would get $22 million US in our treasury with no dilution to our shareholders or 13 cents a share. Mark O'Day is the chairman. I'm the president and CEO. Moira Smith, our VPX, is responsible for every one of these projects in these companies. She's brilliant, and she has, of those operating gold mines in the world, 217, she was involved with 8 of those discoveries that are currently producing and making money. She's brilliant. 237 million shares outstanding, $200 million market cap. At the end of this year, we'll sit at a minimum of 10 million US in our treasury. There are currently VanEck with their warrants has 19% of the company. RCF, or Resource Capital Funds out of Denver, have 12%. Management have 6.8%. And there are now 15 other pure resource funds that now own Liberty Gold. Here's the 3 projects. I'm only going to focus on the Black Pine projects. They're all selected for a minimum 2 million ounce target by our scientists. They're all past producing run-of-mine oxide heap leach mines. We've got the metallurgy, and we've compiled them over 2 years, and then we start to drill them. This is Black Pine in Idaho. We bought this project in 2016 at the request of Moira Smith for $800,000 US. and 300,000 shares of stock and a 0.5% NSR. We purchased 100%. Subsequent to that, we found the historical data of 1,874 drill holes, all the blast holes, all the metallurgy, everything that came with it. It took 2 years to remap this property and digitize that data before we started to drill it this April. This is a simple picture of it. The photograph of Black Pine is taken from a distance of 18 kilometers, and that mountain is the oxide system. We're currently sitting with 2 drills in the red area in that photograph. That's a square kilometer. The mountain has been burned. There are no timber values here. All the drainages from this mountain go into the flatlands, which are the dry part of the Great Salt Lake. There are no salmon streams. There are no fish. There's no water on that mountain whatsoever, and we've now hit oxide gold to a depth of 300 meters from surface, and there's no water in those drill holes. The simplified cross-section, because I know most people aren't geologically oriented, just imagine the brown rocks here being the floor of this room, the blue, purple, and green where we're sitting, and the yellow rocks are in the top. All the gold is in this room. It's been thrust over top of a system over a 12 square kilometer area. It's compressional, and when the compression relaxes, you drop your shoulders and the cracks form in the floor, and we're looking for the cracks in the floor. And we find those as feeder fault corridors. We follow them, and that's where our high-grade discovery is. When this mine operated for 5 years, they only drilled to 92 meters, and had they drilled another 50 or 60 meters deeper, they would have hit a Tier 1 gold asset. They just missed it. Here's the depth of the 5 pits and the grade tenure of those pits. An average run-of-mine oxide heap leach gold mine in the United States of America runs 0.4 to 0.5 grams per ton. The discovery at Black Pine, we're getting significant intercepts at 2 to 8 times those grades. Some of the historical drill holes are shown here, but what's key is those pits are dry and there's no water where we don't want it. We took 2 years to get a plan of operations. Everything around this, the blackish lines, and the red geometric figure of square kilometers in here. We have the right to drill for 7.3 square kilometers where we want to and when we want to, and we're not buffered by any species or anything like that. Where it says sandstone cover rocks, that's the roof. There's a skin sitting on top of the system, and the overall oxide gold system covers 12 square kilometers. Every yellow dot is a historical hole with a 25-meter radius to it of above cutoff grade oxide gold that the previous operator did not mine. When we compiled this on the property basis where they drilled, we bought this for around $1 million, and there's 1.5 million ounces of oxide unmined sitting on it when we purchased it. The gray areas are the 5 open pits where they mined 660,000 ounces out of it. Our mapping said it was one system and they all linked together. This is a photograph. You can see the Great Salt Lake about 30 miles off in the distance. Our first discovery was made by testing underneath of a historical pit where we thought there was a horizontal component to the gold system. And we nailed a high-grade oxide gold system. That's a kilometer long, that green line. And it's 150 meters laterally when you get to it on one end and 150 on the other end. Then we stepped off that 250 meters and we drilled to where the yellow line is, and we hit 48 meters of 1.78 grams of oxide gold that is 92% cyanide soluble. We thought we had a third zone where the red truck is in the southwest corner. We've drilled that, and that is still discovery 2. It is 55 meters thick, and it's approximately 400 meters wide so far. And we subsequently drilled a step-out hole of this, if you want to call it one, off that red square by 2.8 kilometers to the left, and we've hit the system again. So we now have confirmed a 12 square kilometer oxide system. This is confusing. All I'm trying to show you is the blue lines. Those are the structural corridors where the high-grade mineralization is. All those colored dots, red and purple are great. Purple's a gram. That's unmined oxide gold intercepts above what we discovered. And you can see the tenure of our gold grades of what our intercepts are on the screen. So we started with 2 areas where we could pull a pit. We subdivided the host rocks into 3 different colors of green based on silt or carbonate content. And the key was to drill in the before slide between those 2 zones, and if we hit the high grade, we'd confirmed our model. We drilled that, and we hit it on every single hole. After those 8 holes, we pulled the drill off Goldstrike and put the second drill onto this project. Now this is just showing our drilling. We thought 90 holes would drill off the first square kilometer. We're currently drilling off 30% of it, and we're on our 92nd hole this year. And those purple lines, forget about the colors, don't get confused, that's the width laterally of the high-grade gold corridors, and you can see the oxide gold grades. They're high. So this is a very important slide I'd like you to pay attention to. Before we started drilling, we took, of the 1,874 holes, we took the 500 top unmined intercepts, and we started to see how our numbers were compared. After 69 holes, oops, should have told me. Oh, I'm going the wrong way. It won't go backward?
Won't go back?
No.
To the first presentation?
No, no, no. Yeah, no, I'll get to it right here. I got it. Out of the first top 20 undrilled holes, 13 of those are Liberty Golds. They average 52 meters of 2.29 grams oxide gold. That's 5 times what a mine is being operated. That's why there's so much corporate interest in the company. This is what one cross-section looks. Everything in a color is above cutoff. That's the high-grade oxide zone at the base. This is 250 meters away. That's the high-grade oxide zone. That's Discovery 2. This is it in cross-section. The whole mountain gets taken. Everything they missed is sitting in that dark green unit, and that's a kilometer. That's what 5 to 10 gram material looks like. And now these last 2 pictures, these are 2.5 kilometers long sections, what's been drilled and what is untested. So approximately 85% of the high-grade zone still remains without a drill hole. That's cutting it at a right angle, and you can see how much gold is on this property. And currently, within that property, the triangle, we're trying to drill off approximately 2 to 2.5 million ounces of good oxide in 1/12 of the target. That's it. Okay? There you go. Thanks much.